So, welcome back to the Investing Markets and Money podcast. And this week we are talking about Canadian stocks, and in fact, some of the best Canadian stocks. We are discussing the upcoming TSX 30 list. And on the podcast today, we have Rob Peterman, who is joining us from TMX in Canada, who is going to give us a little bit more of a rundown on what the TSX 30 is and why we should be paying attention to it. So welcome to the podcast, Rob.
Thanks for having me.
So I guess the best thing to do is start off with the TSX 30 itself. Can you just explain what it is and how companies qualify to be one of the TSX 30 companies?
Absolutely. So the list is an annual ranking of the top 30 performing stocks over a 3-year period. And it is based on dividend adjusted share price performance. So what we wanted to do was look at great performance over the long term. So not quarter to quarter, but celebrate those companies that had delivered the best performance for their shareholders over a 3-year period. I'd also say, it's a bit of a report card for the management teams of these companies. So they have outperformed all of their peers. So I think, if you think about what a report card might look like for a company or their management team, I think this qualifies as something that would be very important. And we also think it's a very interesting lens to think about the dynamics of the Canadian economy, important trends in capital markets, some of which, aren't just Canadian. These are global trends as well. So I think when you dig into the TSX 30 and what these companies say about the markets and how they're evolving, there are lots of interesting conversations that can happen.
And how long has the TSX 30 been going?
So this is the 6th year that we've done the TSX 30 and celebrated these companies.
Gotcha. And just to clarify, the TSX 30 is basically a list of companies that you publish every year. It's not like an index that can be used for a financial product or anything like that.
It isn't. It's something for investors to look at, and we would acknowledge that the list itself is backwards looking, so it's looking at performance over a longer period of time. But the list itself is backward looking in terms of actual performance in a 3-year period.
Understood. And so, looking at this year's TSX 30, what are the sectors that have dominated?
Yeah, so if we go by the numbers, which is exactly what we should do, the first sector that jumps to the top is the oil and gas sector. So 11 of the 30 companies come to us from the oil and gas sector. The second sector, which we also think is very interesting to think about, is the industrial sector. So the industrial sector was the second largest sector represented in the TSX 30. So you have 8 companies from the industrial sector. And then the mining sector is third with 6 companies, and then the technology sector. So from a sector standpoint, that is what you see. And maybe just make a couple comments about the top 2 companies on the list, because I think there's a little bit of commonality there as well. So our number one company on the TSX 30 over this 3-year period is a company called Hammond Power Solutions, which delivered a 928% return to shareholders over that 3-year period. They are delivering critical infrastructure to energy transition projects. And then the number 2 company on the list is a well-known Canadian name called Celestica, which is a technology company. But Celestica provides sort of product innovation and supply chain management for its customers And Celestica delivered very strong returns as the number two company on the list. So their 3-year return was 706%. And I think there's a little commonality between those companies in terms of that they are providing solutions for sectors and industries.
And look, are there any other big trends you've seen from the actual list this year? Anything that's been reflected in that?
Yeah, I think I'll talk about two things. So the first thing that really did jump out at us was how established a lot of these names are from a Canadian market standpoint. So when you look at the list, you are going to see names like Celestica, Fairfax Financial, Bombardier, Imperial Oil. These are well-known, larger Canadian companies that delivered tremendous growth to shareholders over a 3-year period. So we think, the size and scale of the issuers was something that really jumped out at us when we looked at it. These are, blue chip Canadian names, well known across the Canadian economy, but at the same time, over this 3-year period, on average, the TSX 30 companies delivered a 234% share return. So these are larger companies that grew. And one number we use to put this into a little bit of context is these 30 companies collectively created around $210 billion of market capitalization on the TSX. So they grew quite substantially in what was a challenging period with higher interest rates and lower access to capital. The other thing, that we do think the list speaks to is that the theme of energy transition and energy security, which I believe will be the defining theme of the capital markets over the next 10 years. But I do think what the TSX 30 lets you do is really look at how that theme's playing out in reality. Because when you say energy security, you say energy transition, it means different things to everybody. And the TSX 30 gives you a chance to look at that list and see how is it actually playing out in the markets in terms of investors, in terms of profits for companies. So I think the TSX 30 is a very interesting lens to think about energy transition. And just maybe mention a couple ways that you could think about it. So number one was Hammond Power Solutions. We talked about them as the number one company on the list, providing transformers and different technology for energy transition projects. You've got 11 oil and gas companies on the list. And then other things you'll find as you go through the list, but one I'll just draw a little bit of attention to would be Cameco Corporation. So Cameco is a company that grew its market cap over this period from $9 billion to around $30 billion over this 3-year period. Cameco provides uranium to the nuclear industry. So this question of what is the role of nuclear power in energy transition is another question for investors to think about. So, without taking a view on different things like vehicle electrification, supply chains, carbon efficiency, the pace of renewable energy investment, the TSX 30 is a lens to how things are actually playing out. The companies that are driving shareholder returns, and that would be connected to growing their businesses.
Yeah, I'm not surprised to see Cameco on the list because one of my favorite Canadian stocks, that one. You mentioned dividends already. Can you speak a little bit more to the dividend picture of the TSX 30 components, particularly compared with when the list was first launched? Have things changed?
Yeah, I think, dividends definitely stood out with this TSX 30 list, and what I'll maybe do is I'll contrast the 2024 list to the 2021 list, and if we think back to 2021, that was a different period in the markets. There was a lot of emphasis on growth at that time. Our TSX 30 list in 2021 only had 8 companies that were paying a dividend, and I think that that's a reflection of what that market looked like at that time and the emphasis on growth. And we saw in Canada, we saw globally an IPO market that was largely driven around growth metrics at that time. If we move forward to our 2024 list, 19 of the companies are paying a dividend. So not all of the companies are paying a dividend, but 19 of them are paying a dividend. It's a much higher percentage of the returns that they delivered to investors. So when we think about that 234% return across the TSX 30 companies, the dividends they paid to investors were a much more significant part of the returns that these companies delivered compared to the group in 2021.
Are you seeing any takeaways here in terms of the efficient use of capital by the leading Canadian companies, especially around the fundraising area?
I think one of the things we acknowledge is it has been a difficult capital raising environment for the last 3 years. And I think when you look at the 30 companies on this list, we think they delivered very good returns for investors. But when you dig into, was this market cap growth coming from financings? Was it coming from acquisitions? These companies did do acquisitions, some more than others, but they did not finance very much across the TSX 30 companies. Many of them didn't finance at all. So they delivered that growth efficiently, utilizing their own balance sheet. They weren't going back to the market to raise capital. And when they were doing acquisitions, they were largely funding that organically from their own growth. In addition to that, paying dividends to shareholders. So in a challenging period, high interest rates, difficulty accessing capital, we do think these companies showed an incredible sort of efficiency of capital in terms of growing organically versus using a lot of financing or M&A to grow.
Yeah, and true, given the tough market environment, to have made it on the list this year, you really have to have been very high quality business indeed. And one question that's probably going to occur to a lot of people is whether there are any companies on the list this year that are starting to look like consistent components, given that you've been doing it for 6 years, and what's making these guys successful?
Yeah, so I think this is a backwards looking list, and we do see companies that will appear on the list year over year. So there are companies that, were on 4 years ago and then they're on now. It's in terms of, the themes of energy transition, that has been a theme we've seen fairly prominently on the list. This idea of energy security, energy transition, companies that are either delivering solutions or working in those industries have consistently been on this list over the last couple of years. But you also see, we talked about Celestica as well, like technology companies that are driving solutions for their customers also appearing on the list. So it's a really incredible achievement to have put forward, consistent growth like this across 3 years. But the one theme that has been consistent across the last couple iterations of the TSX 30 is definitely energy security, energy transition.
Can you draw any other conclusions from the TSX 30 that tell us about the changing face of the Canadian market and indeed potentially global markets as well?
Sure. So I, we talked about that. These are larger companies that have grown. I do think that this also tells a bit of a story that we see across the market. So there's no disputing the fact that the burden on public companies continues to be a challenge, and the way that the market is responding to these challenges is companies tend to be bigger. They tend to have more scale. So on and this is in Canada. This is globally. So on one hand, while we have less public companies, those public companies are a lot bigger. So if we go back to 2015, our average issuer is now 110% bigger than it was in June 2015. So the average market cap of the companies is a lot higher than it was 10 years ago. And, but what's also happening in that, if you think about, there are less companies, but they're bigger, the entire market cap of our markets on the corporate side continues to grow. So while there are less issuers, the corporate market cap has continued to grow on the Toronto Stock Exchange. And that's because the companies are getting bigger. They're doing M&A and growing. So this is a trend we see across capital markets in Canada. It's a trend we see in global markets, but companies are adjusting to these challenges, and one of the ways they're adjusting is getting bigger and adding scale. So while there are less companies, the amount of market capitalization that is available on the exchange continues to grow.
Also, finally, I wanted to ask you whether there's anything from the TSX 30 that can tell the non-Canadian investors who maybe not be that familiar with Canadian stocks as any sort of core takeaways for them as well.
Yeah, I think so. Our view, like when it comes to a topic like energy transition, we see that as a global theme, with the reputation the Canadian markets have around materials, that they have around energy. There's an important role for our markets in financing energy transition, and it is an interesting moment for the mining sector, the energy sector, and the industrial sector around those industries that support that. So we think the Canadian markets are at the front edge of financing this, and it's a global theme. So I do think international investors can take a look at the TSX 30 and think through these different themes that are playing out around what's the infrastructure that is needed, what are the current energy companies doing, what are the critical minerals companies doing that are providing the supply chain around vehicle electrification and the ability to deal with the batteries that support the transition to renewable energy. So there are themes that global investors can look at here, that will be playing out in their own markets, or playing out in their own markets shortly.
And if I want to find out more about who's on the TSX 30 list, where can I go to find that list?
Yeah, so we have a website that will be available if you Google TSX 30. I'm sure it will take you right to the list, so you can see the companies, and we'll be over the coming months putting out sort of additional thought leadership as we kind of celebrate the performance of these companies over the last 3 years, but also looking at what some of the themes are that played out in the capital markets over the last 3 years.
Fantastic. Well, thank you very much indeed for your time today, Rob.
Thanks for having me, Stuart.
No, thank you. And you've been listening to the Investing Markets and Money podcast. We've been talking to Rob Peterman of the Toronto Stock Exchange. You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.